What's going on, good people? Welcome back to another episode of Trading My Scalping Strategy. Today is May 23rd, 2023. We made some trades today, so let's get into it. So coming into today's session, my goal was to just simply trade my strategy the way that I know I'm supposed to. So today I decided that I wanted to focus on trading my personal account and just take a break from trading the prop firm account and doing the evaluation, because I'm just making some really good trades, and on the days where I make really good trades, at the end of it I just feel slightly disappointed because I'm like, wow, I'm still doing the evaluation for the prop firm. So I said, you know what, let me come over back to my account and put some money in my pocket real quick. So that was my goal coming into today's session. But just to start off, I would say that what I've learned most importantly about live trading is that it's going to be a different feel when you switch up your contract size or the way that you're trading. So I remember when I was doing the prop firm challenge, when I went from trading one contract to trading two contracts, it was more of a mental block that I had to get over and just realize that, hey, a trade is a trade. Don't worry about the money amount, just focus on the dollar amount. And I think that same idea also presented itself today, where I actually was trading my own account, because this was the first time ever in the history of my trading career that I've actually traded a full size contract on the Dow Jones. So the real $5 contract. Usually I trade micros, so for me this is a big step up. And I think a little bit of my mental mind frame was affected today because of that. Now that's not an excuse. It's just the reasoning behind some of these trades and why I didn't really capitalize like I should have. And it's a lesson that I can build on going forward in the future. So let's get into it and let's talk about it. So let's start our analysis at, actually, as a matter of fact, before we start, let's talk about all of our major levels on the chart. So today we only have one. So that would be the closing price from yesterday on May 22nd, which was around 33,366, I want to say. All right, so now let's start our analysis. Now let's start over here at 9:30 when the market opened. So we had a pretty, I guess you could call it a moderate sell-off when we opened at 9:30. We pushed back up to a level that was support previously in the pre-market. We pulled back down, created a higher low. Now this led to one of my favorite setups, which I call a downtrend reversal with a higher low that gets established. So once prices reverse hard off of a downtrend, I like to see that higher low, and then I draw a level of support based on the lows of that higher low, and I look to go long when prices come back into that support level. So that's what led me to go long right here at trade number one. Now this was a great entry. I followed my plan as far as looking for exactly what I wanted in the market and getting in at the right price. I did a good job of that, but what went wrong was the trade management and the exit. I moved my stop up to break even just a little bit too quickly and saw prices come back down and stop me out at break even just to continue up to my original profit target at the top of the zone. So I think what I've been learning about zones over time is that sometimes you have to, maybe you don't move your stop all the way up to break even, but maybe just move it halfway of what your profit well, halfway of what your stop loss would be. So if my stop loss is 14, usually if I have a position that moves in my favor and I'm trading the zone, I shouldn't necessarily move my stop all the way back up to break even, because prices have a tendency to come back and retest that support level, which is where I went long at. So what I should do instead is maybe decrease my stop by 7 points. So instead of it being 14 points away, now it's only 7 points away. So basically I'm trailing my stop up as prices move in my favor, but I don't really want to use a complete break even stop when it comes to trading zones. So that's one of the lessons I learned from trade one. So once we push out of the zone, we come back, we have a solid breakout, we have a retest right here where I've circled this little wick that comes back to the zone, and that was all we needed. That was the retest right there, and from that point forward we continue moving higher. You really could draw yourself a bull channel if you started right here at 1, connected that trend line to this higher low at the breakout of the zone, and then just extended that up throughout the market. It should bring you back to around this wick, not too far away from where I took trade 2. Now my reasoning for taking trade 2 was that I saw another higher low, get established. So I use the same strategy that I used from trade one. So I look to go long after I drew a support level on the lows of that higher low. And as soon as prices came back into support, I went long. Now let's zoom in a little bit and really break this down. Now I think my entry was good, my trade management was good, but my exit, I'm not gonna say was bad because I did the best I possibly could in the moment, but I still feel as though I left points on the table. And I would say that because usually I aim to take profits at the top of the zone if I'm trading from zone to zone. So that was my same idea right here on trade number 2. The only thing was when it touched the top of the zone, it moved away so quick that this was the best price I could possibly get by the time I clicked the button. So I would say that in those scenarios where prices could move fast, maybe I should have my order already right there, resting right there, because I had my take profit a little bit higher just in case prices spiked through the zone and came all the way back up to the top like they did right here. But if they were able to come back just to the top of the zone and I had my order here, I would have locked in all of that profit and not left maybe 4 or 5 points on the table. And those 4 or 5 points really make a difference over the course of time, especially over the course of a week, a day, or even a month. Those 4 to 5 points really start to add up. So on trade 2, I did okay. I followed my trading plan in terms of entries, but I still got to work on those exits. Got to. So then once we retested the bottom of the zone and created this higher low, we pushed back up to the top of this blue zone, which was a zone that was established in the pre-market and was still important even after the market opened. So on trades 3 and 4, I basically just looked to go long as prices came back to the bottom of the zone. I knew that we were in an uptrend. We had a consecutive series of higher highs and higher lows. So I know one of the biggest principles of market action is that usually whenever you make a new high in an uptrend, you'll pull back to the previous high, find support at those levels, and then go long again. So this right here used to be the previous high. And once we broke out past that, it will only make sense that we come back and retest it. So not only are we retesting these previous highs, but we're also retesting the bottom of the zone. So right there, I went long at 3 and I went long at 4. But on both of these trades, I scratched them for break even because I was just a little bit too hesitant and too scared to hold the trade. And I would say in this moment, I was just scared of the potential losses that I could take. And I think that goes back to just not necessarily being completely familiar with the size that I was trading. So me trading one contract for the first time, it was a big jump for me, and I was a little bit too timid on trades like this. But like I was saying earlier, I need to focus on the validity of the trade and not the dollar amount behind it. Don't worry about the money part. Just worry about making the best trade possible no matter what size you trade, and you should be good. So I think at 3 and 4, I made the right decisions in terms of my entry. I went long right here. I just got to work on holding the trades that I believe in the most. Now trade 5, when we come over here after we push back to the top of the zone. Now 5, that was just, I would say this was an entry that could have been avoided, a loss that could have been avoided also, because I think this was more of a revenge trade from trades 3 and 4. Because on 3 and 4, I saw things go in my favor, even though I wasn't in the trade, even though I entered in that direction. So then I was like, you know what? I'm going to catch it when it comes back to the support level again. But when it comes back the next time is usually not as lucrative as the first time because it's just not as many people participating on the second touch as it is on the first attempt. And that's because people have already taken profit. If you went long right here at 3 and 4 and you were able to take it to the top of the zone, you really wouldn't want to go long at 5 because the appeal just isn't there. You say, hey, I already made that trade, I'm good. So I think on 5, I just need to learn how to accept the fact that sometimes some of my better entries, not all the time, but sometimes they won't go my way, like on trades 3 and 4. But that doesn't mean that I keep chasing the market. It's like the market gives you windows of opportunity. If the window is open, you can go in. If it's closed, you just gotta wait until the next window opens, unless you want to try and stick your hand through glass that's not open. That's gonna hurt you a lot more than it will the glass, so maybe that's not the best decision. So in the market, when it comes to windows of opportunity, You want to take advantage when the window is open, but once it's closed, you just wait for the next one. You don't try and force that last one that just closed to open back up. So that's what I learned right there on trade 5. So we came back down, we retested the same higher low that we made from trade 2, which is where I actually should have went long at lower prices, because markets usually have a tendency when they're in an uptrend to come back and retest those major levels of support that were established off of a higher low, because that right there is a swing point where a multitude of traders were doing business. So more than likely prices will probably come back to that level and find support, and that's what we saw happen right here after trade 5. So then we pushed up back to the top of the zone once again. So this level is acting as extreme support, extreme resistance, at least for this moment. So I see prices come back down, retest the bottom of the zone at 6. So I look to go long, but I got stopped out at break even on trade number 6. But let's zoom in. When prices spiked back through my original entry price, that's when I went long again, and then I took prices back up to the top of the zone. So that's a good trade right there by me. On trade 6, if I have a break even stop where prices spike through my break even, if they spike back up in the direction of the original trade that I took past my entry price, I'll get back in and ride it up. And that's exactly what I did right here on trade 6 and 7. So did a good job of following my trading plan right there. And then we see prices continue moving higher. The uptrend continues. Now at point 8 and 9, on trades 8 and 9, I went long again, but I got stopped out at break even both times once more. Now this was because I was just being a little bit stubborn and not taking the profits that the market was offering. So I was looking for prices to come back all the way up and retest yesterday's closing price, because if you're in an uptrend that's making its way towards that closing price, more than likely that closing price will act as a magnet and you can just hold the trade until it gets there. Now, how the market gets there is really what you got to pay attention to, because on some days it'll just pretty much shoot straight to that level. But then on some days like today, it's going to get to that level, but it's going to play around first, because look at where I entered, and then look at all of this choppiness that we have to go through before we eventually reach that price. Now, this choppiness caused a lot of indecision in the market, and that is what led to prices kind of stalling out right here, because I think a lot of people like me probably was like, yeah, okay, prices are going back up to yesterday's closing price at least to retest it. But then when they saw this, I guess you could call it barbed wire formation start to form, they was like, it's a little bit of indecision. I'm not sure which way to go. Now on these trades, I would say I made the right decision by letting my break even stop get hit, because even though I had a chance to take maybe 15 or 20 points in this situation, I just don't think that was the right decision, because I saw the closing price so close that it only made sense to take that trade. So on 89, I ended up getting stopped out for break even, but I'm okay with that. Now on trade 10, this was another example of not catching the move on the first example and trying to catch it on the second attempt and having that second attempt not be successful. Because when I saw prices actually come back up and tag yesterday's closing price, I'm like, okay, let's see what the reaction is going to be around this level now that we finally made it here. So we pushed down, we made a higher low. So of course I drew my level of support right there, and I used that as a reference point to enter and kind of make like a micro consolidation zone of 10 points between this higher low and yesterday's closing price. So my original thought was to go long right here and take it back up to the top. Now when this candle came back, I hesitated and I didn't put my entry where it should have been on this candle and had the ability to take it back up to the closing price. Instead, I waited for the second attempt where it came back down, and that's where it actually shot all the way through, all the way back down to the bottom of the zone, and I had to take a loss on that one and get stopped out. So I think right there, that's just another example about taking the trade the first time, being decisive. Don't hesitate. When you see what you like, just go ahead and get in, take your trade, win or lose, you roll with the results. So that's what I learned right there on trade 10, and that's something I've been learning over these past couple of weeks also, which is you can't hesitate when it comes to the market. You see it, you take it, and it's as simple as that. So on trade 11, I went short, but I took a small loss because I saw what I was doing. I saw that I was getting in at the wrong price, because what I've learned is that you can't really try and enter your trades based off of random candles. So I was trying to say to myself that if we're in a downtrend and this was technically a lower high, they should come back to retest this wick from the lower high. But I was looking at the size of the candles and I'm like, Ty, you're really stretching it trying to use that wick as a reference point, because it's not that that's not a lower high. It is. But more traders in the market are going to do business around major levels of support. Now, this level right here, it could be debatable as to whether or not that's really a level or not. I might say it is, but other people might say, yeah, I don't know, maybe it's not. But it's not going to be too much of a debate as to whether or not this higher lows level of support is going to be important. That's definitely going to be important because everybody can clearly identify that level on the chart. So what I've learned is that I should only take my trades from major levels of support and resistance on the chart, because it'll be more people in the market that'll probably be active around those levels, which will probably help me push the trade along that I'm getting into, so I can actually make profit. So once I realized my mistake at 11, I cut that trade pretty quick for just a little small loss. So that's I think that's an improvement right there for me, because I think maybe a long time ago I would have just held that trade and said, if I took it, then I'm gonna keep it. Let me see what happens. But once I realized my mistake, I'm able some days, most days now, to quickly get out, take the loss, and not even think about it. So I think I did a good job right there of just limiting my losses. Now, let's zoom out a little bit to get the bigger picture. So notice how after trades 8 and 9, once we broke above the blue zone, we trended towards yesterday's closing price, and then we found strong resistance, and we pretty much established a new zone between the closing price from yesterday and the top of the blue zone that we have right here. So once this zone got established, I saw what I considered to be a lower high get established right here. If you compare it to where we came from at the top of yesterday's closing price, and even more if you go back to the first time we hit it, compare that to where we came back to next time. It's not very much lower, but it's lower enough where you can consider that a lower high. So this is a swing high, lower high 1, lower high 2. So I was expecting for prices to continue down and come all the way back to retest the bottom of the zone. Now my problem was on this trade right here, trade 12, was the same problem I had at trade 8 and the same problem that I had at trades 3 and 4 and trades 1. So a common theme throughout today's session is me not being able to take the smaller profits that the market is offering me, because on this occasion I had a chance. I got in at 340, prices came back down to about, 325. So I had a chance to get maybe 15 points out of the market and then just look for the next best opportunity, but I passed up on that one. And I think that's something I got to work on, is sometimes the market won't give you your full profit target, but you'll still get a decent trade. Not the biggest trade, but I'm not trying to hit home runs. I'm just trying to hit singles, doubles, and triples, and then when the home runs come, I'll take those too. But when the singles are there, I don't want to just pass on that trade and say, nah, I want to have more. You got to take what's there, and you got to take what the market is offering. And that's something that I've definitely been learning over these past couple of months. So that right there is something I got to work on cleaning up. And then you notice how this trade that could have worked kind of made me frustrated. So then I took the same trade again as prices came back, like, you know what, this time it's going to work. But that's just not the case. This is just another example of me taking the second opportunity and having it go against me. So that's just a common thing throughout the market. You got to take your opportunity the first time you get it, and you got to ride with it. And then if you get it, cool. If you don't, just let it go. Don't try and force your move. You just be patient and you wait for the market to give you another great opportunity, and then you act again. So I think today, like overall, I would say it was half and half. I think I made some good decisions, but it was also a lot of just smaller bad decisions that added up all together, just led to me not having my best day. but I know exactly what I did wrong. So it's more so about just coming in and cleaning up the small details, focus on the things that I need to, have my mind right. Don't worry about the contract size. Just worry about making good trades and following my trading plan. And if I do those things, I should be good, man. So I appreciate you guys for tuning in with me for another episode. I'll be back tomorrow at 9:30 a.m. May 24th. So until then, you guys, take it easy.